Bitcoin and crypto has put in a pretty monstrous run ahead. Where could it go next? Up to the 65,000, there's a lot of structural overhead resistance, and between 60,648 and 61,569, there is structural support. One thing to always be aware of, even though price comes up, it can come down just as quickly. You want to take advantage of these retracements. So far as it's concerned, we are in an uptrend. We've already seen some signs of life, and it's very, very good to see. We've got a couple of cutovers here, so things are looking pretty good. We should come up and challenge this $65,000 level. How price interacts with that is really important. But don't forget, having this 60,648 in mind is also equally as important, because we see that we're getting some degree of rejection just at the current time. We could get a pullback and a resumption up, or we could get a deeper correction just whipping below there and just taking all of those longs out to then put the shorts in to get explosive action. Market makers are always looking for liquidity, so just a couple of key things that you can keep your eye on. That 68,133 level, the 64,521 level, the 60,639, the 57,931. Of course, if we start to get below here, that could absolutely mean a change of trend. I released a video into the CTKS Method service that actually updated the price paths and how they've been going. Overall, things look very constructive, but just be aware how Bitcoin goes is how the entire crypto market progresses. And Bitcoin is highly reliant and dependent on how the stock markets progress as well. It's fairly useful to remember that no alt can escape Bitcoin's gravity. If Bitcoin is coming down, the alts are coming down. If Bitcoin is going up, the alts are coming up. But the alts are far better at coming up than Bitcoin is, unless there's a flight to safety. And unfortunately, recently, there has been a flight to safety. The Fed changing interest rates is a really big deal. And of course, if you've kept up with the Forex news, you know the Bank of Japan kept rates the same. This is actually really important, because if the Bank of Japan changed their interest rates, it could unwind the Japanese carry trade. But again, that's not a problem. That is the Japanese carry trade, and it gave us a lot of curry, if you know what I mean. Personally, I call it the Japanese curry trade. Looking across the crypto market, we can see Bitcoin is not doing too badly, Ether's up, Solana is going nuts. What's been supporting market action is actually the convergence between the major stock market indices and Bitcoin. Bitcoin is the blue line. The white line is just what that particular future is. For example, the S&P 500 futures, the NASDAQ futures, the Dow, and the Russell. And when you look at the Russell, that's most closely aligned to Bitcoin and therefore to crypto. We've seen a lot of positive momentum inside the main markets, and this has helped to spread risk-on activity right across crypto. To be aware of signals when the VIX comes down inside the main market, we would anticipate that crypto and also the stock market come up. It's a very important thing to just be aware of. We're seeing a bit of a spike in gold at the current time. This could be geopolitically motivated or something else. We've seen the yield start to decay just somewhat, and the US dollar currency index has been selling down recently. When looking at the major components of the stock market, we saw in the past trading session a 1.7% increase, and IT did well. It was the IT one. Looking across individual stocks, we saw some pretty interesting action, and well done to Tesla. And if you're inside the service, you would see those price paths. Very interesting. It appears in 48 days, the Fed will actually reduce the federal funds rate by 50 basis points yet again. It's very early in the piece, and we've got a very high percentage here. Generally what happens after a FOMC meeting and a rate adjustment, you get you don't get this. You get this being very high and this secondary one being very low. We're not seeing that at all. One thing is to not rely too much on the news. The headlines are very sensational, and typically when they're highly positive, that's actually a time to look for a retracement, not a rally. But from time to time we get rallies as well. The major issue inside the market is currently, are we getting a soft landing or a hard landing, a recession, or something like a depression? If you're watching the news or social media, you've seen all of the above. It just plays out all of the time. In the 1990s, we had a fairly significant adjustment, and that led to a soft landing. The key issue here is to understand and monitor what's happening with job growth. If job growth continues to decline, that is a problem. But if things just turn around, that is a Goldilocks scenario. After the 50 basis point reduction, we've seen a lot of news articles out there saying, the Fed is protecting the economic system because it's decreasing rates to lower borrowing costs to fuel economic growth and create a soft landing. Oh, the Fed, how nice. Please let me know in the comments, what do you think? You think we're headed for a soft landing, no landing at all, or a hard landing, or a brutal landing? Please let me know. Just a quick note, on the 9th of October, a new course is coming out, Profiting from the CTKS Method Structure, and you can get this absolutely free. You'll find it at just an incredible course. It retails for literally $600 US. If you're a masterclass student, if you've enrolled in Level 1 and Level 2 standard certification at ctksmethod.org, or you're a current member of the service, provided you fill in the form which is in the link in this description, before the 9th of October 2024, you can get that special rate of zero, nada, zilch. Just some really quick stats that I thought you might like to understand. We're seeing coincidence economic activity index for the US actually increasing. If we had a problem or a recession, we would expect this kind of behavior. We're not seeing that, at least not yet. The soft landing will be predicated on companies making money and increasing their earnings per share. What we're seeing here at the current time is that we anticipate this forward projection line to keep on going. Again, we'll keep an eye on it. Looking across the data is really important. When we look at a GDP-based recession indicator index, it's currently measuring a 4% probability of a recession. I don't know about you, but that's not very high. And just when you thought it was safe to go outside and buy and go all in and more and use leverage trading 1,000 to 1, you see something like this. Stagflation in the 1970s, stagnant GDP growth, unemployment, and guess what? Rampant inflation. And what has Zero Hedge said? Look, it's just right on cue. Well, maybe not. Realistically, it depends on what happens. Jumbo size rate decreases are generally in response to the economy imploding in some way. That leads to very negative returns, 1 year out and 2 years out. But those negative returns are for investors. For traders, you can make a fortune during times like this, literally going long at spot. But you need to know what you're doing. If we're not seeing recessionary woes on the horizon, and we're not at the current time, things could go quite positive. So from that perspective, we may avoid this and may be heading towards this instead. Again, I'll keep my eyes on things and let you know as we go. And if you're new to the community, a really warm welcome, and please smash that subscribe button so you don't miss a thing. For example, those rate cuts, you can see the S&P 500 behind here. There's a lot of intermarket volatility that goes both up and down. Of course, it's more down than up, but if you understand how to look at price and how to just gauge what's going on, you can make life-changing wealth during these times. And I don't mean from a negative direction. And you can even see that after things start to bottom out, yes, it does go up. And primarily, investors can only make money in an upward market, going long at spot or long under leverage. We specialize as a community in going long at spot, but it doesn't mean you can't use leverage, because inside all of these areas are up and down price momentum. you can make a fortune. A lot of people use trend following systems. A trend following system is only as good as the trend itself. They simply cannot make money in a sideways market. Well, that's not very good. You should be able to make money in any market. And what about 08, 09? You can see a lot more variability. When you get signs of weakness inside the market, you must pay attention to those. But you always get volatility both to the upside and to the downside. This may look like a horrific decline, but there is opportunity inside these things if you know how to look at the reality of price action. Therefore, it doesn't matter two hoots which way the market is going, we'll be making money in this community. If you would like to learn how all the markets work together, you could be the recipient of the Shah and Al CTKS Ambassador Partial Masterclass Scholarship. All you have to do is apply on this link, and this link is in the description of this video. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.